Congress is tied up with what to do about the situation, and we have the stalemate in Europe where if they do have a referendum and so forth, they don't want to take the austerity measures. A lot of political hassles going back and forth without any real solution in the wind. Now, we haven't even talked about the upshot, what the outcome will be of the G20 meeting that is taking place. We have the Japanese intervention in the yen market on Monday. We have the U.S. employment figures coming out on Friday. We have a new president of the European Central Bank. He happens to be from Italy, which is kind of the real ground zero focus right now of the whole debt issue. What will he do? What type of policy will he pursue? What kind of leadership will he provide? A lot of things remain to be seen. He did, at his first policy meeting, they did cut interest rates 0.25% to 1.25% because of the kind of is facing Europe. But a lot of issues, a lot of things that we could look at here, and we really probably do not have any answers. So when we don't have answers, the thing that we need to do is we need to go into the market and try exactly where we're at with what is going on. And we need to look at the charts that are provided by Vantage Point Intermarket Analysis Software. The Vantage Point charts are pretty much a kind of a tool that we can use to find out exactly what we're going to do in terms of getting our positioning. And let me get to my charts here, find the right ones. Okay, we're loading Vantage Point charts right now. Okay, let me get rid of this line. Okay, now we are at the Vantage Point charts, and we can talk about the kind of the long-term picture, which is where we always like to start when we're talking about any market. And in this particular case, with the currencies, you have to go back a ways because these things, you think they don't happen overnight. Sometimes the movements are very quickly, but it tends to develop over time. So we're going to look at the Euro-US dollar pair. And when we look at the US dollar pair, we can see that we have some fairly dramatic moves. When you look at the situation here where we had the low way back in the January period, it went to the May high. When you look at the time frame here, well, that's not too bad. That's 83 days altogether that we had there. And in that time, we went up. If you'll see in the little box here in the lower left corner of the chart, 83 trading days, a little over 2,000 pips, 20 cents from the low to the high, $20,000 move. So that's a 15% move, which is pretty dramatic when it comes to currencies when you consider that. And then you have some other moves, some of them maybe not quite so dramatic, but also, profitable for a trader who is nimble, can get in and out. And you have the May trade, the May high to the May low, 14 days here in this particular case, not, as long as a stretch, but still 900 plus pips and $9,000, 13 trading days that it took to do that. 7%, minus 7% move in the pips, or in the Euro-US dollar pair in that case. Now, when we talk about what is going on with the more current situation, we have the August high and the early October low. And when we look at that particular pair, we see, or that particular time frame, about 27 trading days, we've got almost 1,400 pips, 14 cents. If you look at it from that standpoint, a 11% move at about $14,000. So we're talking about some pretty sizable money here that is available in the market. Most recently, we had the move from the October low to the high that we had just last Thursday, where the market shot up, went out of sight. Particular move in a short period of time, 17 trading days, over 1,000 pips in there. Again, 8.5% move. Fairly volatile market, I'm sure you would have to agree. Volatility is good up to a point, but sometimes when it gets too volatile, too fast, then it's not particularly work in our favor. Now we're going to put a trend line or two on here. It depends where we draw that line, exactly where we go across. It's a pretty subjective thing with trend lines. We have talked about this before with trend line. We're also going to make a mark over here on the right-hand side, and we're going to leave that one up here because we want to talk about the situation with this triangle that broke through in August and set up a position, a short trade. And we're going to leave that on the screen because that'll come into play when we talk about the more current time frame. Now, when we look at all of what we have here, you can see that we have our ups, we have our downs, The question is, if we start with technical analysis, a traditional technical analysis, we can see some things that maybe we should do and positions we should have, but how do we get them where we want to be with those particular moves? So we're going to cut back our time element to focus on the more recent situation. We're looking at, this case here, a 3-month chart of the euro dollar and U.S. dollar, euro and U.S. dollar pair. We have, in this case, we have a couple of candles I want to highlight first to talk about, because they're kind of interesting types of candles and shows you what's going on, rather dramatically in just the last few days. First, we have this candle here, this long white candle that stretches to the upside, October 27th. And remember, I mentioned that 4 a.m. agreement, that vague agreement that supposedly happened, and everybody, whether it was euphoria or everybody was thinking happy days are here again, whatever the case may be. You can see that we had a candle that stretched over a 4-cent range, and we had an extreme overreaction. It was kind of one of those situations where people, I think, read into some kind of an agreement a lot more than there really was, and we don't know why that happens. We don't know, it's kind of a mystery why traders react as they do sometimes, but in any case, this was a bounce, and if you're looking at where we had to go up to this 145 area, which was kind of the top of the recent range, you got to wonder why didn't, why did the market bounce up with everything that is going on? It didn't get as high as it should go, but this was a great bounce in which, if you were inclined to go short based upon everything that you were hearing about the market, a good place to go short. But you got to wonder, what were traders thinking? The trading really, whatever the agreement was, everything was not resolved, and so you have a candle the next day, a very short one. Looks like a harami type of a candle, and in that case you'd like to sell below the low of that candle, and that's kind of the way the traditional chart analyst would look at it to get into that market. Now we then came into this day right here, October 31st. That was another volatile day, and that was, people started to realize, well, if they have a referendum, if they have things that apart, what's been resolved? Nothing's been resolved. They still have the issue, have things going on. It's kind of like, the buy the rumor, sell the fact type of thing. Well, this is kind of like, the same type of thing, but there really wasn't, any real significant thing you could say for a rumor as far as any settlement of the problem, any resolution of the problem. So we have here a candle that dropped back another whole 3 cents, 300 pips, and we're back to pretty much basically where we were, right in here where we were starting in there, and then the market was going to continue on a little lower from that. Now, we know the range, we know the sense of what is going on, we kind of have a feel for, situations that are, how do we actually use that in terms of what we're going to do for positioning. And then for that, we're going to turn to some indicators that are provided by Vantage Point intermarket analysis software.